3 stocks and 1 ETF are showing signs of the Eiffel Tower formation. And when it ends, it's not good for stocks. So stay tuned for more. Thank you for watching. This is Richard with Wisdom Investor. We're going to take a look at the Eiffel Tower formation here. We're going to look at 3 stocks and 1 ETF that are showing signs that this Eiffel Tower formation may come to a completion down the road here. And usually when that happens, that's not good for stocks. We're going to also look at our support and resistance areas and also talk a little bit about earnings. We're right in the middle of earnings season, so stay tuned for more. We're going to take a look at this Eiffel Tower formation here. Many of the technology stocks are showing this formation. Typically what happens here, the stocks skyrocket to the upside, and then they reach a point where sellers start to come in, profit taking takes place, and the price of the stocks move all the way back down. So usually it's not good by the time it gets back down to this low end. Right now is not the time to be buying. We're going to take a look at 3 stocks and 1 ETF here. The first stock we're going to look at here is Apple Computer. Apple's had an excellent recovery off of the lows of the coronavirus March 23rd lows. It's moved up here and it's about ready to complete this Eiffel Tower formation. So what that would mean is that this stock is going to be coming back down most likely. Now where would it come down to? First area of support is probably going to be around the 320 area on Apple. It ended the day at 371, down about 4%. The next area would be around this 290 area, and then if things get worse, it'd come all the way down. I would be very surprised if it came all the way down, but then we don't know what's going to happen here. The next stock we're looking at here that is forming the Eiffel Tower formation is Tesla. Now Tesla has moved up off the lows from around 400 up to 1500. The highs were at 1800. It was down about 5%. A move back down to about 900 would be the first area that Tesla could move down to. Now it may not happen all at once, but that's where the next area of support would be, and then it could even get down to 600 if things aren't going right for Tesla. Typically when a stock moves up like this, it is going to come back down and touch pretty close to that 200-day moving average. Next stock we're going to look at here is Amazon. Amazon has moved from around $1,900 per share all the way up to $3,300 per share, just a little above that, and it's starting its descent to the downside now, down 3.66%. This could come all the way down to 2,300 if the market starts to sour due to the coronavirus. I would be very surprised to see it go lower than that, but anything's possible in this day and age. Amazon was supposed to report earnings today, and they changed that. It's going to be July 30th. The ETF that we're looking at here is the QQQ, Nasdaq 100 Technology Stocks. Now we're going to look at the Dow Jones Industrials, S&P 500, and the IWM Small Caps. We're going to look at the support and resistance areas in just a moment. So stay with us through the entire video. But here's QQQ. It came all the way up to 270 after hitting a low of 165. So just a little over 100 points to the upside. It was down 2.61%. So if it completes this Eiffel Tower formation, it could come down to about the 230 area. If things really sour in the markets, even down to 220 area. I would be very surprised to see it attack and test these lows that we had back in March. Okay, we're going to look at the support and resistance areas here. There's the Nasdaq 100 QQQ. Here's the resistance line, red. It did go above this red resistance line up to about 270 area, but then we've had a couple of down days here. We've come down to the moving average support line. The first area this could reach, if we continue to see more selling, would be around this 245 area. This would be our next area of support. That's where we would look for a possible buying opportunity to go back to the upside, unless we get massive volume to the downside. But then it would be coming back down to the breakout point at this area of 245. We did have some pretty good volume to the downside, the VXN, which is similar to the VIX for the S&P 500. We want to see the VXN start to get over that 50-day moving average. You can look at our technical indicators. They're starting to move down. So we'll be watching these indicators here. And we're going to look at the Dow Jones Industrials DIA ETF. Again, it was down also today. Our next area of support's probably around this 260 area, hit the moving average line. The solid support would be right around 258. So if it comes back down to the 258, it'll come back down to the breakout point on this last move higher. We're going to need to see more selling to the downside. I need to pick up some volume to the downside. We also want to see that VIX index start to move higher. We're looking at the IWM Russell 2000 small caps. We talked about the possibility of money moving back into the small caps if the technology shares started to move down. It has increased here somewhat. We came up to this resistance area and it's backed off here today, but small caps may have an opportunity to move higher. But I think as long as the overall market is selling, the small cap's going to have a hard time making it over this resistance area. Support here would be around the 141, 142 area for the IWM small caps. We're looking at the S&P 500 ETF, the SPY, the SPY, and it moved over the resistance area over the last week here. We did have some pretty good selling to the downside. If we get those technology stocks starting to sell off, that will affect the S&P 500, also the Dow. You got Apple in all of these, and Apple is one of the top weighted stocks in the QQQ, the Nasdaq 100 DIA, Dow Jones Industrials, and the S&P 500. We did have some volume increase here. So our first area of support for this SPY is going to be at 321. If things start to pick up to the downside, we'd look for around 317, then could get all the way down to 308 to take out this breakout point on this move up that began around July 1st. Now we do have the Tom DeMark TD9 sell signal on the QQQ, the Dow Jones Industrials DIA, and the IWM small caps. The S&P 500 SPY has not reached the TD9 sell point at this point. But what we do need to see, for example, on the QQQ, we got to see it start to break below 256 and start to sell off to the downside. Really, if it hits this first level of support, I would not call this a disaster for the QQQ at that point. However, if we start breaking below 245 on the QQQ, that would be pretty negative. We do have some breaking news on Intel. Earnings were just reported after the bell, and it looks like the stock is down 8.34% after the bell. So there's something in those earnings that investors are not liking at this point. Let's look at the chart for Intel here. It closed at the end of the day at 60. It's now down to about 55. So let's take a look at where that's going to put us. That's going to drop Intel stock here lower, break below some support areas. Intel stock's not really looking that strong. It's had a nice move here to the top, and since it's been showing some weakness since about June 1st. Let's take a quick look at the top 5 stocks in the QQQ, Nasdaq 100. Microsoft down on the day, down to some support areas. The main support area would be around 198 if it should sell off further. Let's look at Apple Computer here. Again, sell off of almost 5%. 365 would be that main support area coming up. If it holds here, it can bounce higher. Take a look at Amazon. Came down to the moving average support line, continues to selling off. 2750 would be the support area. Google's also showing a reversal off the highs. Came down to this first support area. The next area of support on Google around 1460. Facebook has been trying to penetrate above the resistance line, is failing to do that. Came back down. Next support area on Facebook is 227. We've got a lot of earnings coming out next week. We'll get a good idea where this market's heading here over the next few days. We also have the GDP number coming out. So stick with us.